Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another follow-up interview with the founder and chairman of Banxa, which has had some interesting news announcements recently. Domenic Carosa, I want to thank you for coming in and giving us an update. Domenic, it's been a kind of rough waters a little bit here, right? But Banxa's not going anywhere.
Absolutely. It's been a tough time in the broader market and particularly tough in the crypto space. And we certainly haven't been immune. However, in the background, we continue, building the company step by step, being obviously very prudent around our costs, which for those viewers that have been watching before, last quarter, we basically removed $10 million a year of expenses out of the company just to move us closer to profitability. And only a couple of days ago, we sold one of our non-core assets for $3 million or $2 million US, which was effectively a domain name and a couple of websites associated with it. So just a good way to continue strengthening our balance sheet. And more importantly, we sold one domain name for $3 million. And we also happen to have and own a number of other domain names like bitcoin.co.uk in the UK and bitcoin.ca for Canada and India and Europe and Ireland and Mexico and Kenya, and the list goes on. So, we think that's, $3 million for one. We've got another 10. What should that be worth? I guess, the viewers will kind of make up their own minds.
Right.
And, in that respect, life is good, albeit somewhat challenging from a market perspective.
Right. But I thought it was fantastic. It was a nice way to raise some capital without diluting the shareholders, right? I mean,
absolutely. And just to sort of elaborate, these domain names were part of our legacy B2C business. When we started in 2014, our core focus was B2C in Australia, as you can maybe tell by my accent. And I'm a domainer from the mid-90s, so I always love premium domain names, and you can't get any more premium than Bitcoin in key countries. And so we started in Australia, and then we bought a bunch of others. But then what we realized, just to give some context, as we built the company in Australia, we worked with the government on regulation. We got one of the first licenses, as in cryptocurrency licenses in the world, and had implemented local payments, not just credit card, which is what most of our competitors do, but local payments like ACH in the US, Interact in Canada, POL in Australia, and the list goes on. You needed to have appropriate licenses. And then we sort of stood back 3-4 years ago and said, we've now effectively solved this problem in Australia with regards to regulated fiat on-ramps and regulated fiat off-ramps. There's actually a bigger problem to solve globally. And that's really the whole evolution into Banxa, is taking really what we did in Australia as a proof of concept, solving the regulatory and the payment issues, and made it global. And that's why the business has been growing very rapidly over the last 4 or 5 years, and hence these domain names are basically legacy. And the board's view was There's no point them sitting on the balance sheet, not being utilized. And I know I had someone email me and say, well, why didn't you utilize them? Very, very good question. So Banxa is a B2B, business-to-business provider. We plug in payment infrastructure and regulatory services into major exchanges like Binance, OKX, Huobi, Edge Wallet, a whole bunch of Web3 type applications. Typically, those applications are what you call B2C applications, business to consumer. So we're a B2B provider, and we provide a service to typically companies that provide a B2C service. By Banxa actually owning these B2C domain names, what would we be doing? We'd be competing against our own customers. So we made a choice. Do we focus on B2C? Or do we focus on B2B, which is a much larger market, but then we can't really be doing both. Hence, we'll basically sell the non-core assets. That's the story, because I had a few questions on why. That's the reason why.
And that seems like a very, very good reason, right? So, I mean, so let's talk about that. That's the latest news release you guys have had, but you also had a release a couple of weeks ago about the
US expansion.
Right there.
Yep. So just once again, to give everyone watching context, what does Banxa do? We are payments, and we're regtech, regulatory services. And may I ask, what does that mean? Obviously, it's AML, KYC, and understanding the customers, but it's also doing things like doing analysis on the coins, on the wallets. Those are this whole regulatory piece. And if you read the news or watch the news, you'll know that there are more and more regulations that are coming into the space. And when we hear this, that's really music to our ears, because it plays to our strength. Because, and that's, I guess, a natural evolution of the crypto industry as it becomes more mainstream. There's going to be obviously more regulation from a consumer perspective. And so what we do is that we acquire, they're basically, in the US, they're called MTLs, money transmitter licenses. We lodged in September, so only a couple of weeks ago, a further 28. We now have submitted 40 money transmitter licenses. And because in the US, you need to do it literally state by state. And we now have an office in Nevada. And we're also doing not only ACH, but ACH, which is instant ACH, and US investors will be more than familiar with that. And so the strategy here is to take what we've been doing around the world. Around the world, they're called VASPs, virtual asset service provider licenses, and it's usually done country by country. However, in the US, there's a much more effort. Each state is like its own country, and so we need to go and get the MTL, the money transmitter license, in each of the states, and that means that we can service customers in the US, and the US is basically the largest crypto market in the world by 5x. UK is second, and for us, it was just a natural extension, a natural evolution, and the MTLs, the licenses that we hold, and effectively the technology infrastructure, they are really the core assets of the organization.
Okay, so how much larger is the States compared to the rest of the world?
So the US is 5 times larger than the UK. Okay. I did a tweet about it a couple of months ago when we first moved into the US. I can't remember the stats. I can go back and share it with you on Twitter. And for those of you that want to follow me on Twitter, I'm D Carosa, D for Dom, D Carosa, Carosa. And you'll be able to check out some of the tweets, including the 5x growth there.
So, I mean, crypto or Bitcoin taking a little bit of a beating again today. We got Jamie Dimon on yesterday, kind of bashing crypto, doesn't get it, but yet at the same time, JP Morgan the company is positioning themselves well in the crypto space, right?
Look at not what they say on the front end, but look at what they are doing in the back end. Well, no, this is not just JP Morgan, but this is some of the other banks. They're now, every major bank has got a blockchain division. What are they doing in that blockchain division? Point one. And point number two, most of those big banks have now implemented a system where their customers can buy Bitcoin and Ethereum. That's kind of like what the market was doing 4 or 5 years ago. They are behind the times compared to customers, but those big institutions move slowly. But we're now seeing all the big banks starting to not only offer their clients an ability to buy and sell crypto, but also hold it from a custodial perspective. And why? Because there is demand for it, because crypto is a legitimate asset class. And if you want to take the blockchain one step further without wanting to get sort of all geeky on everyone, but this kind of like really does excite me. And I was chatting with a fellow who's involved in a bank here in Europe. And what they are doing is that they are now tokenizing all of the assets. And he was giving me an example. I said, well, just give me an example. Like, they've built the technology, but it's really interesting to see how blockchain plays out in action. And so he said one example is that they have a very rare Rolex watch, which the bank keeps. It's an asset. And what they've done is they've tokenized that Rolex watch into 10 different tokens. Effectively, you could even go as far as say it's like an NFT, non-fungible token that represents 10% of that. And then that token is listed in, like you see your US, Euro, Canadian bank account, you've got your token account, which is 10% of this particular Rolex watch. They've done the same with paintings. So this is I'm going to call them a mid-sized bank in Europe. And I'm just trying to sort of give some examples of, let's call it the old banks and what they're doing. They're just now starting to get involved in Bitcoin and Ethereum. And the banks that are maybe 3, 4, 5 years ahead are saying, well, we can use this blockchain technology. Not only are we going to allow our customers to buy and sell crypto, because that's a given these days, we're going to allow them to tokenize assets, different kinds of assets that typically they wouldn't get access to, like paintings, like Rolexes. And because it's tokenized from a technology perspective, they can, it's on the ledger. It verifies that it's all there. So, that is just why personally I'm so excited about this whole ecosystem. And why I'm so excited about Banxa, it's because we are providing the infrastructure that connects the existing, I don't want to call it the old world, but to a degree, it is like the old world with this new digital asset world. We're like the bridge, the infrastructure, the on-ramp, the off-ramp, obviously within a regulatory framework.
And so last time we spoke, there was a term that you used that you could do. I'm trying to think the way you could term the transactions. It was online, or was it offline too? I mean, I'm trying to go back to what it was. You're trying to make this system as efficient and quick as possible, right?
Yeah. So the problem that we're solving for all of our B2B customers is managing all of these licenses. Managing one isn't trivial, but ultimately, if we've now, with all the submissions and all the ones that have been accepted, we've got 50 plus licenses. And managing 50 is much more complicated than managing one. But what it does is provide our customers effectively a one-stop shop. They can try and get each of these licenses around the world one by one, and go to every single country and do it one by one. Or they just plug in Banxa, like an API, which is just another fancy name for a technical connection between them and us. And then they can go global in a regulated way, literally by the click of a switch. And that's the value. And how does Banxa make money? We just basically clip the ticket. We're like a toll road when you drive on, and when you drive off, we just basically charge your car.
Okay, got it. So the market has not, for whatever reason, the story isn't resonating with it, right? And
Yeah.
maybe that's the whole crypto space. I don't think crypto's going away. I certainly don't think tokens. I mean, there are a lot of scams out there, and I understand that. And I actually, I think that that's kind of a good thing because it does force regulation. It does grab people's attention, right? But I mean, let's face it. I mean, banks aren't exactly 100% safe either, right? I mean, nothing out there is 100% safe. So I mean, I don't want to. I don't think this class is going away. I think it's very early stages and still yet to be defined, right? But I think a lot of use cases like what you just pointed out is validating the fact that there's a whole realm of possibilities for where this thing goes, right? And that's beyond meta. We're not even talking about meta, right?
Yeah.
But I mean, you've got in gaming, I don't think that that's going to go away. The buying of skins and all of that stuff that in one game you can buy them, but you can't take them to anywhere else, right?
It's interesting you bring up gaming, and I mean I could bring up a slide, but if I find it, I'll bring it up. But a lot of people just think that let's call it Bitcoin and Ethereum. It's just about people buying and selling coins, and you know what? To a degree, it actually is. But if you kind of take a step back and look at what the technology is actually about, and what are some of the other let's call it applications, and I have actually found that slide, so I'm just going to share my screen and show the audience. And so the market really, when it started, was in the sort of stable coin crypto market space. Very material markets. That's really the buying and the selling. But we're taking, let's call it Bitcoin, blockchain type technology, the infrastructure behind it. Where is it heading? Where are the real utilities? And you sort of brought up blockchain gaming. I mean, that's a $300 billion industry. It's like you said, you can play and you earn tokens, and then you can exchange those tokens. And the skins can be, there was recently they call it a DAO, or distributed autonomous organization, which basically, and it's all on the chain. And what it was, they had a collection of all of these high value, high impact skins and armor and swords and tanks and all that kind of stuff. And so what you could do is you could take the credits that you've just earned in playing that game. You could go and rent the best tank possible based upon the token that you've got, go back into the game and play it and try and earn even more tokens. And then at the end of the game, you give it back. And because it's on the blockchain, it's basically all done automatically. So you could actually rent it. Imagine try to do that without the blockchain. It's virtually impossible. So this is why, and it opens up so many more use cases and interactivity. That's just one. Obviously, NFTs is another big one, which I'm not going to sort of get into. And I know you talk about, Meta and the metaverse. They're expecting that market to be 8 trillion. The metaverse is bigger than the stable coin market, than the cryptocurrency market. It's expected to be bigger. And that, once again, is all built on the blockchain. But frankly, in terms of that, we are, I'd say, 3-4 years away until that becomes much more tangible and much more of a reality. Things take time in terms of adoption, but I can bet you in even a couple of years' time, and part of the work that Zuck's doing at Meta, the old Facebook, is creating these, effectively the glasses that you wear. And so rather than doing the Zoom right here, I'd be wearing these glasses at this point, and we actually be sitting somewhere having this conversation, as opposed to the screen. It's literally, I look at you and you're there, and you look at me and I'm there, and we're interacting as if we are there together, but we're really in this virtual world in the metaverse. Yeah.
Yeah.
And just imagine that technology, and then you kind of lay entertainment, e-commerce, and all of these other verticals, once again, on the blockchain. And then if you take it the next step, you're doing this all in this metaverse, but then if you want to then cash out into fiat money, or you want to get in because you want to buy something, you need to go fiat on ramping and fiat off ramping, and hence the value of Banxa. As all these new verticals start to evolve and grow, Banxa is the infrastructure that basically brings it all together.
Okay. So what do you think the market is missing about Banxa?
Personally, I think all micro stocks right now are down, and Banxa's no different. Personally, I do think we can do more. I think we can do better in terms of communicating the story to the marketplace. I think you're going to see us become a bit more active and on the front foot at this point. And we're still having some discussions with internally and with our IR firm around what else we can and should be doing. I think you're going to see us being much more visible in terms of the key messages in the and also just trying to dumb it down, make it simpler for investors to really understand what we do as an organization. Because I think once investors understand that we are effectively like the infrastructure for this new asset class, for Web3, whatever you want to call it, DeFi, NFT, blockchain gaming world. I think at that point, investors will realize that Banxa is a very valuable asset, and as we continue acquiring licenses and continue building out our payment infrastructure and the technology, which actually brings it all together. But it's one of those things. We've been through bear markets before. This is now, they call it crypto winter where I'm from, and this is now the fourth winter that we're currently going through. We've survived the other three. There's a number of strategies on how to do it, and frankly, you just have to cut. You just need to effectively adjust the cost base in order to match the revenue. And we always know that summer will come, could take 6 months or 12 months, but summer will come, could be 18 months. And then when the sun starts shining, we push the button and we really focus on growth again, like in a very mature way.
How is this winter in comparison to the other three? Is this more of a dramatic winter than the other three, or is it kind of like right in line?
I'd actually say it's a little bit more, it's different and it's a little bit more dramatic.
Okay.
And there's been a confluence of events. You had, let's call it the global economy slowing down, with post-COVID, all the issues around supply chains, and all the massive money going into the space. It's no wonder we've got inflation when we basically double the money supply in sort of couple of years. What do you expect? You only need to look back at history to actually understand what actually happens. And I can't remember who it was one of the politicians, one of the economists, like, we didn't realize this was going to happen. And I'm thinking, I'm not even going to comment, because frankly, it wouldn't be nice what I'm about to say, but frankly, how can you not know? A rudimentary reading of a history book will tell you when you print too much money, there's only certain things that are going to happen. Anyways, so I think we've got that going on. Obviously, the war, the Russia-Ukraine war, that's never helpful. And the crypto winter at the same time. And what we had earlier this year, we had Luna and a couple of the so-called stable coins collapsing, and obviously some public companies and other collapsing as well. So that basically kind of brought down part of the sector. But my view is that is a good clean out of part of the industry. And so in that respect, we've had war. We've had kind of like, let's call it the general economy post-COVID going negative. and then you've got some of the things that have been happening in the crypto space as well. But I always kind of look at things in terms of medium to long term. So always looking 1 to 5 years out. That's kind of like my time horizon, and we will ultimately get out of this crypto winter. I think. Well, I mean, like other recessions, depressions that we've had, we always come out of it. Is it 6 months or is it a year or a year and a half? It's usually fairly quick, as compared to, let's call it, the depression, which was a couple of years longer, and that's just because they really didn't utilize, they didn't really sort of try and re-stimulate the economy at that point. But anyway, we're sort of getting into economics right now,
right,
and but which I find interesting, which has, in my view, a lot of connections with the whole crypto space. And if you want to talk about Bitcoin and anti-inflationary, I could have another discussion with you.
Yeah, I think that's part of the issue too. I think is the fact that Bitcoin has been coined as the value. What was it? Is the holder of value, right?
Yep, store of value.
Store of value. And kind of like gold, right? I mean, that's the comparison often heard. And when the market was tanking, and the Bitcoin was not validating that theory. I think that was part of the issue too, right? And then you had kind of like the scare with Coinbase, which I don't know if they've weathered that storm or not. I really don't pay a whole lot of attention to Coinbase, but I think that if a company like Coinbase were to go down, that would be a pretty big black eye.
Coinbase is not going down. Coinbase, I would not be concerned about Coinbase going down.
Okay.
Maybe from a cyber attack, like every single institution and power company could potentially go down for a day or a week, like that I'm more concerned about in terms of cyber. In terms of them going down as an organization, highly unlikely is my personal view.
Okay. All right. So, I mean, we've talked about it. You and I think this is either a third or fourth. And, I would love to have one of these. So one of these days, it's going to be a different type of conversation, right? The stock's been in a downtrend for a while. It just took out new lows. And that is concerning from a technical perspective because, well, where is their support? And honestly, I have no answer. I would have never thought that it would get here, right? But at some point, and I always say risk reward, what is your risk to your potential reward at this point in time, right? I wanted to make sure that we got you on, especially after announcing the raise, well, not the raise, but the
main sale.
Yeah, the ability to bring in some capital without diluting the shareholders, right? And you've got a whole slew of other names that you could potentially sell off, right? To bring in more capital. Are you stressing about capital at all, Dom?
I'm always stressing about capital. I think as a board, as a company, if we are not constantly looking at capital and our finances, we don't have $1 billion in the bank. We've got double digits, so we're happy. But like any company, you can always have more. It just means you can do more. But right now we are living within our means, and I think that's and our CEO Holger Ardians is doing a fantastic job in leading the organization and ensuring that our cost base is fit for purpose. And I think the most important thing here, and you ask a really interesting question, Tim, is at what point does it turn around? And I think undoubtedly there's been a downdraft about the market. There's been a downdraft with regards to Banxa as well. And I think what we'll start seeing will be, let's call it, investors that maybe take a more fundamental approach to investing. Like you said, the risk reward. And if you kind of look at it and say, just to pick some, I don't even know what the share price is today and what the market cap is. But if you kind of look at what we do, let me try and find the market cap of Banxa BNXAF. Let's call it a $25 million market cap. $25 million market cap. The domain names are potentially worth a third, potentially a third of cash and a third for the business. And so if you just take that rule, a third, I'm just kind of using very, very rough round numbers. Any investor can look at our sort of financials and kind of work that out themselves. But if you just take that as a base, what you're saying is the Banxa business, the enterprise value just of the business, excluding those other sort of cash and assets and domain assets potentially, it's worth like 10 million, 12 million. Is that fair value? And I'm not going to answer that question because I think the answer would be obvious, and I'm biased. So obviously I'm going to say, of course, it's undervalued. But coming back to your point around where I think that inflection point will be fundamental investors, institutions. I'd say maybe less institutions at this market cap and more family offices and high net worth investors are looking at it from a fundamental perspective. Because what's the downside of that? As you said, risk over reward.
Right. You guys are, I don't get the sense that you're going anywhere, right? You're here for the long haul, right? You're going to continue to grow. You're going to continue to expand your licenses. I think was it the last quarter of the revenue? There wasn't as much revenue because there weren't as many transactions, right?
Yeah.
But
yeah. Our business is what they call there's a lot of leverage in our model, and obviously we've got a fixed cost base because in terms of running infrastructure, if you think of infrastructure, and let me I guess give the analogy. Let's just say you build a toll road, and it costs you $1 billion. I mean, I'm sure they cost a lot more these days with inflation. Let's just say they cost $1 billion. Whether you have, and that road can handle one car, and just say that road was a toll road, it can handle one car, or it can handle 100,000 cars a day. The cost of that road to build and to maintain is pretty much the same, whether you have one car or you have 100,000 cars a day. And that's the same model, albeit we're a technology business. It's the same. We still need the same number of people in terms of managing the infrastructure, the technology, the licenses, the payments. And whether we have, 50 million or 500 million or 5 billion transaction volume coming through, the technology, the system, the infrastructure does the heavy lifting. And right now, just to give context, the December quarter was a record quarter for us. I think we did almost about $500 million of transaction volume. The volumes have come off, hence the revenues come off because the market's come off. But that just kind of shows you that our infrastructure is capable. And as we move from winter into spring and into summer again over the next 12 or so months, our infrastructure is ready. And I can see us one day doing 5 billion a quarter. In fact, 5 billion a month. And the technology, once again, will do the heavy lifting. And that's where, at that point, the 30-40% EBITDA margins would emanate from a company like us. That's the leverage in the model.
Got it. All right. I mean, look, I keep saying it, the risk reward to me is very favorable here. I just wanted to try and paint the picture for everybody that Banxa is here for the long haul. You're not going anywhere, right? The crypto market is in question right now. The overall markets are in question right now, and I do think it's going to get worse before it gets better, at least for the stock market, because we haven't had that capitulation moment yet. I mean, it's coming. I can see we have not had maximum fear throughout this whole pullback, and I still think the mega caps and the large cap companies are still overvalued, right? I think in the tech industry. They're trading about roughly 21 times earnings. And that is typically, I think typically it's between 13 and 17 times earnings, right? And 17 is rich. So I think, we've still got some room to come down. And that, unfortunately, when the overall markets are pulling, everything pulls. 90% of stocks are going to follow what the market's doing, right?
Yep, that makes sense.
But you're here for the long haul. You are. Is there any, I'm sure maybe there could be some concern of a reverse split, right?
No.
No.
We've put our NASDAQ aspirations on hold until 2023. Right now, we're just focusing on the business. There's no point listing on NASDAQ right now. It's, as we say in Australia, head down, bum up, just focus on the business. And as we start to see some green shoots in terms of the market, at that point, it may make sense to push the button on NASDAQ because we didn't, with 50 odd million shares on issue, we're not going to do a reverse split. It doesn't make sense to do so.
No, and then you know what? That's music to my ears, right? I mean, I know there's people that are probably disappointed with that, but my position is this: you don't want to go hop into the NASDAQ just to get into the NASDAQ. It's because you're going to spend the next year trying to stay listed on the NASDAQ, and that's where all your energy is going to be focused, right? Just trying to stay listed, and it's expensive to go there. So, I think you want to have the wind in your sails and at your back, all cylinders firing. And that's when you make the move when the move makes sense. And right now it doesn't, right? So that makes me happy. I mean, that might upset people because you had mentioned, I think previously, that is where you want it to go. And it could look like you could potentially get there in very quick fashion, right? But I think you're making the right move. I mean, and that sometimes is tough to swallow, but it's the right move, right? So I'm happy to hear that.
We actually started the NASDAQ process earlier this year. We jumped pretty much over every single hoop that was put in front of us. And then really the last hurdle was around the pricing, minimum $2 US share price for 90 days. And I think that's where we were day number 60 or 70. I lost track of, we were that close earlier this year. But anyway, and then I think, Russia invaded Ukraine and it was kind of all over Red Rover at that point. But that's okay. I think right now the market is the market. The best thing we can do is control. We can't control the market, but we can control the business. As I said, head down, bum up, and just continue building the company. And NASDAQ will come. We originally thought it was going to be towards the end of this calendar year. It's just going to be sometime next year, depending upon market conditions. I can see us getting back to $2 US a share, and then from there, 90 days plus. It's not a insurmountable. What is that? I mean, I'm looking at the share price. It's 50 odd cents currently US, roughly 25 mil market cap. What's $2? $2 is 100 million. Is 100 million possible with Banxa? Absolutely, because we've been there before. We've actually had a materially more market cap, and at that point, that's when it makes sense to go to NASDAQ. As you said, I think really solid advice. Wind in the sails.
All right, so real quickly, just looking at the chart, I mean, it's been a rough go, upper left, lower right, but at some point, I mean, where is it going? Are we going to zero? I mean, if Banxa is going bankrupt, then yeah, we're going to zero. We're not anywhere close to going bankrupt, right? We're nowhere near insolvency, are we?
Absolutely not.
Not even remotely close. You are in expansion mode. You are in expansion mode, just open an office in the US, which is 5 times greater than the rest of than Europe.
Not just Europe, than the UK. We're obviously taking, just to be clear, it's not all guns blazing. We're being, we've got, like in business, there's only, let's call it, so much capital that we have, and we decide, do we go into the US? Do we go into this market? Do we go into that market? If we were in the bull market and we had like $100 million in the bank, we'd say, we're going to go all three. But we don't have that luxury right now. And, as I said, I come back to, I've spoken about Holger, our CEO, as you can maybe tell by the name, he's German, very methodical, very organized, very disciplined, absolute perfect CEO to have in a business such as Banxa. And so we just adjust what we do based upon the capital that we have. And so we made a decision rather than going into 5 separate countries, let's just go into the US. Let's do it really well in the US because it's by far the biggest country in the world. So if we're going to do any country, you would want to do the US. And so we're not doing, 20 other countries that we previously had on our shopping list. They will come in due course at the appropriate time. But right now, we basically live within our means, and our focus is the US market because it is absolute ripe for Banxa.
Perfect. All right, Domenic. Listen, I always love it when you come in, man. You're one of my crypto experts, and I mean, you have your finger on the pulse of what's happening. I think you guys have made the right moves. You've like you said, you've pulled costs out of saved the company about $10 million a year. I mean, you're doing everything that needs to be done, and at the same time, you're still focusing on growing, right, and growing in the right market. So, I think these are the smart moves, and those are going to pay off when we do get through this crypto winter, and there will be summer again, unless it's the end of the world. And if it's the end of the world, well, then who cares? It's the end of the world, right? Doesn't matter.
It's not going to be the end of the world. It will not. It absolutely not. Won't be the end of the world. But you're right. If it is, who cares about the stock market?
All right, Domenic. Thanks.
Thank you, Tim.
Listen, when you have some more developments, we'll have you back. We'll do this again. Okay.
Fantastic. Thank you. Thanks, Tim. Thanks for having me.
All right. Thanks, Dom.
Cheers. Ciao.
All right. Take care. Hey there, all you stock market junkies. Thanks for tuning in to another interview here at Alpha Wolf Trading. Today we had Domenic Carosa from Banxa Holdings Inc. Ticker symbol BNXAF. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the best of success.